Real Estate does not necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. We've been, it feels like mid-year to me, despite the fact that it's August. Feels mid-year-ish to me. So we're going through, reviewing some things, take a look at our portfolios. Where are we at? What are we doing? What do our returns look like? We're having a lot of conversations with our club members. I had a great event last night in Sugar Land where we talked to some of the folks there. What's everybody doing? What are you seeing? How many deals you buying? In fact, we were chatting before the radio show. I have another meeting here up at the office. We start at 7 a.m., bright-eyed, bushy-tailed every morning. It's the partners in one of the other firms. And so we're sitting around the conference table in my office chatting, and we jumped on MLS real quick. MLS is HAR, for those of you who are familiar with HAR, Houston Area Realtors, which I saw some sign that said homes and rentals, which I thought was interesting. Anyway, so HAR is our MLS, multiple listing service, where real estate agents place properties for sale. And so we're just sitting in this meeting, just hanging out this morning, just pulled up HAR real quick and saw a couple of good deals. We're like, ooh, that'd be a good deal for our passive investor group. That one would be a good one. That would be a good one. So Ryan fired those properties over to our transaction coordinator. He's going to get on the phone with the real estate agents, and we're going to make 5, 6, 7 offers today. I made one yesterday. Oh, sweet little house. Sweet little house. It's in a submarket, and the price is, rents are fantastic. It's been sitting on the market. I guess there's just real estate agents or real estate investors that aren't looking on MLS anymore. I don't know what the deal is. I mean, it's just something's changed in the last year. And it seems like there's a lot more deals out there than there were in the past. It just seemed, maybe I don't know what it is. I'm just seeing a lot more stuff out there than I did before. And prices are still rising. Rents are still up. It's not like the market's crashing. Everybody thinks that there's a price correction means a market crash, and that's not true. So I'm looking around, and I'm like, I'm seeing opportunity all over the place. In fact, name of today's show is My Wife Buys a Rental. So she closed on her rental property. I should get the updated rehab estimate from Fast Track today. We closed on it Monday. The former owner is going to stay there until this weekend, and then the rehab starts next week. Rehab should be done first week of September. House will be refinanced by then. Probably have a tenant in there, and she'll be off to the next one. And then we'll do the next one, the next one, next one. I mean, just... You know, it's amazing. This business is not very hard. Let me back up. This business is simple. People, and in particular, the people in between their ears, that space in between their ears, make this business really hard. And it's just not. It is really not that hard. How much cash am I putting into a deal? That's my investment. What am I getting back out? What am I making in cash flow? How much am I, when my tenant pays my mortgage down, how long am I going to hold that property? What's going to be my equity position? How much equity am I receiving when I buy it? How much equity am I going to have in the future with appreciation? It's not that difficult. It's a simple business. people want to sell you all kinds of stuff to make it really hard, and it's not. This is really simple. I know, this is what's amazing. This is what I love about real estate. No, I don't know any other investment that is like this. I know how much money I'm going to make before I close the deal. I do. Now, is that always 100% accurate? No, we could have a rehab that goes over a couple bucks and, that sort of thing. But by and large, I know going into this thing, I will know more buying a single family house as an investment than I will any investment I make. I know everything about that house, that neighborhood. I will know everything there is to know that's humanly possible before I close on that deal. Compare that to what's going on in the stock market. Do I know how many iPhones are going to get sold next year on Apple? Do I know how much stuff Amazon is going to sell? I really don't. But I know that this house I'm buying, house my wife bought, we bought it for about $80,000. It needs $25,000 in work. How do I know it needs $25,000? I called Fast Track. Fast Track went out and looked at the house and said, Jason, it needs $25,000 in work. I said, all right, guys, when can we get started? They said, we can get started in about a week. And I said, gentlemen, how long is it going to take to rehab? They said, give or take about 4 weeks. So I know how much the rehab is. I know how long the rehab is going to take. And then I get on the phone. Jerry Todd, Property Care. Jerry, how long is it going to take to rent this property? I don't know. Let me look. And they go into their databases and squirrel around. Look, oh, we think it'll rent for $1,250 a month in about 4 weeks. Great. Let's go ahead and get this thing listed for rent. Then I call my appraiser. Hey, appraiser, what's this house worth? Well, what are you buying it for? Buying it for $80, needs a lot of work. Here's the scope of work I got from Fast Track. So when you go out to look at the house, you can compare that to what the house is going to look like afterwards. So Michelle over at Next Gen Appraisal sits there and looks at it and says, well, I think the house is worth between $140 and $150. So I'm buying it for $80. I have an expert that tells me it's going to take $25,000 to rehab it. I have an expert that's going to tell me it's going to take $1,250 a month to rent it. And I got another expert that's saying it's worth between $140 and $150. Buying it for $80, put $25 in, we're in for $105. The house is worth, let's split the difference between $140 and $150. We'll call it $145,000. I'm in for $105. The house is worth $145. How much have I made before lifting a finger? I've made $40,000. And I haven't done a thing. I haven't even looked at the house. Quite honestly, I don't even know what side of town it is. I need to look at the address. I know the street. I know the street name because it's on all the docks. I haven't driven out there. I haven't jumped in my truck, I got to go to this house. I got to go do X, Y, and Z. I haven't done a thing. I had somebody bring me a deal. I looked at the deal and I said yes. And then we did our due diligence before we closed. Mind you, I got all this done before we bought the house. I'm in for $105. It's worth $145. I can turn around and sell that house when Fast Track gets done with it in a month. How many of you guys made $40,000 this week checking your email? Because that's essentially what I did. Checked my email. Oh, here's a deal. I'll take this one. How many of you guys made $40,000 this week doing that? I did. I really hadn't done much. I contracted the house. I didn't even write up the contract. Somebody else did that in our office. I signed it in between meetings. One of the girls came in and said, hey, you need to sign this. Okay. What's this for? Oh, you just bought this house. Great. I sent an email to Fast Track. No, I think I called Elijah. Hey, man, you got time to go take a look at this house? Yeah, dude, I can go take a look at it. In fact, I remember I called him when I was driving from the office to an event I was speaking at. Or maybe I was going to a happy hour. It all starts to blur together at some point. Yeah, man, I'll go take a look at it. One phone call. And then about 3 days later, in my email box, was a detailed scope of work.
2 minutes.
One is what they call a room-by-room estimate. That's what they're going to do by room. And the other one is really their process, where they start and what they do first, and then how they finish it. So it's really a project scope in time order. Then I called my lender. I got a private lender on this deal. Actually, I didn't call her. I think I just shot Maribel, who's our transaction coordinator, shot her an email. Hey, you're interested in funding this deal? Yeah, let's do it. Can you send me the numbers? That's it. We've built a whole process over here where all of that is in-house. It's all done for you. Here comes the deal. Fund the deal. I mean, it's that simple. Bought the house. I increased our family's net worth by $40,000 simply by signing a couple of contracts and sending some money to the title company.
1 minute.
$40,000. I'm not going out there and checking on the work. Fast Track's going to go do it. I'm not doing any of that. So I'm literally moving paper from one side of the desk to the other. That property, I'd have to pull it up. Maybe I'll do that in the break. I'll tell you the total return I expect to make on this property. It will blow your mind. I'll pull the pro forma up here during the break. We call it the deal analyzer. It's really a pro forma. I will pull it up and I will share with you what I think that house is going to make our family over the next 5 years. We'll get back from break. We'll talk more about this house my wife bought this week. It's Jason Bible, Right Path Real Estate.
Mike's off.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you.
Here's the property.
This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark.
I think I'm going to start throwing this football at people in the window
understands the investor mindset
because it's going to hit those blinds and scare the snot out of them.
Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Are you looking for an investor-friendly
All right, 1
general
minute.
contractor for
Alrighty.
your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. I'm sharing a story with you guys today. It happened Monday. My wife bought a rental property. I'm taking you through the steps of buying a rental property. We had somebody bring us a deal. And what's great about real estate as an investment is if you're doing this right, there shouldn't be any huge surprises. You get the property inspected, you get it appraised, you get Fast Track out there to give you a number, your insurance guy gives you a quote. I mean, it's like, this isn't, the house is worth $100,000 less than when I bought it. It's not, that doesn't happen in real estate if you're doing it the right way. So I pulled up the pro forma. We call it our deal analyzer. And I'll share with you some numbers. I'm buying the house for $80,000. It needs $25,000 in rehab. Where did I get those numbers from? Well, $80,000 is the price they wanted. Seemed like a good deal to me. Great, let's put it under contract. Fast Track went out there and did their handy-dandy assessment for rental properties. We had some discussion back and forth about, putting this type of granite in instead of this, and we're going to do this color instead of that. So they're going to do all that for us. Needs $25,000 in work. So $105,000. The house is worth about $145,000. Could be worth more. But for the sake of argument, let's just say it's $145,000. The house should rent for about $1,250 a month. Where did I get that number? Well, talk to my property management company. Hey, what do you guys think this will rent for? Well, about $1,250 a month. Okay. Great. So bought the deal. We closed on it Monday. The previous owner of the house would like to stay there for another week, so they're going to live in the house for another week, and they're going to move out this weekend. We're going to start the rehab next week. So, Jason, what are the numbers? Bought it for $80,000, $25,000 in rehab, rents for $1,250 a month. We think it's worth $145,000. After it's all said and done, I will be $7,475 out of pocket. For all intents and purposes, I bought a house for $7,500. That's it. $7,500. It is going to, I don't want to call this cash flow. Here's where we get into a little problem. If you listen to a lot of real estate gurus on the radio, they talk about cash flow. Cash flow is not profit. You got to take out vacancy, make ready. You need to take out management. Even if you're self-managing, you need to include all those expenses. So I think this property is going to profit us about $200 a month. Now somebody will say, well, I don't know. I hear these other gurus on the radio that say it should be $400 a month. Well, let's look at our rate of return, because that's the most important piece in this thing. I'm out of pocket $7,400. It's going to bring in $2,000, over $2,000 a year in profit. That's a 36% rate of return on cash. Year one. 36% rate of return just on cash. I'm sure you guys are getting 36% rates of return in the stock market, right? I'm sure you are. Let me put it to you this way. If you can actually match the market rate of return, you need to quit your job now, raise $1 billion, and start your own fund. Because the vast majority of money managers rarely match the market performance once their fees are taken out. So here we are. We got a little rental property, 36% rate of return. It's got a little bit of equity in it. In fact, I have a 385% unrealized capital gain. Think of it this way. I paid $7,500 for $40,000 in equity. That's pretty incredible, isn't it? I paid $7,500 for $40,000 in equity and $2,000 a year in cash flow. How is that a bad deal? It's not. It's a great deal. Now, some of you are probably saying, well, Jason, what if I paid more than $80,000 for it? Well, let's do the math here. Let's say you paid $100,000 for this property, and it still needs $25,000 of work. So you're in for $125,000. $125,000. House was worth $145,000. Still cash flows $200 a month. You bought the house. You essentially bought this house for $28,000. It's a little over $2,000 a year in profit. It's a 9% cash on cash return. You're earning 9% on your cash. Oh, that doesn't sound so stellar, right? I mean, it's a little bit better in the stock market on the long term. I mean, 9% is not bad, but it's not killing it, right? Well, but hold on. That's just one of the handful of ways we use to calculate returns. We also captured some equity. Captured about 29%. Now, 29%. That's not bad. But here's the real kicker. Here's where things start getting real interesting. On Monday's show and Wednesday, I shared with y'all the median appreciation in Houston, Texas. Median. Let me explain what median is. If it's been a while since you've taken a statistics class. Median means the middlemost number. So the median number means that 50% of the numbers are below that number, and 50% of that number, those numbers are above that number. The median appreciation in Houston, Texas over the last 12 months is 6%. Meaning half of houses appreciated less than 6%, and half of houses in Houston appreciated more than 6%. So what I did is I just dropped 6% per year appreciation into my calculator here, and it automatically calculates it. In fact, I'll tell you what it is. If you were to hold on to this property for 5 years, this is going to blow you guys away. If you hold on to this property for 5 years, it will cash flow over those 5 years about $15,000. Total principal pay down, meaning how much debt does the tenant pay down on your behalf? it's about $8,000. Your loan, if you remember, we bought it for $125,000, but we're borrowing $108,000. We're actually down to about $100,000. That's our payoff. And if you guys remember amortization tables, it's the interest is front loaded. Isn't it nice to be a bank? The interest is front loaded, meaning you pay your interest up front. So the first 5 to 10 years, you don't pay much principal down. However, am I paying principal? It's my wife's property. Is my wife paying principal on the piece of real estate? No. She's not paying principal. Who is? The tenant. The tenant's paying principal, interest, mortgage, all that other stuff. So we've got $100,000 left on the mortgage. But here's what's wild. This is the part that will blow you away. The house is appreciating. If you have a $150,000 house and it's appreciating 6% a year, that's an extra $10,000 in net worth every 12 months. By the way, that's $833 a month.
2 minutes.
So this property, in 5 years, with the principal pay down and the remaining balance we have and the appreciation that we're going to experience over the next 5 years, my wife will capture $65,000 in equity. And that's if she bought it at $100,000. I'm all into this deal for $125,000. It's worth $145,000. So we captured some equity on the front end, and then we're getting all this appreciation for the next 5 years. And that's $65,000 in equity. How many of these houses do you have to buy over the next year to make $1 million? It's like what, 13? 14?
1 minute.
Plus you're making a couple $1,000s a year on each one that you buy. If you were to buy this deal for $20,000 more than my wife did, your internal rate of return is 317%. That is insane. When people were asking me, when all this Bitcoin stuff was going on, when they were like, Jason, I mean, you guys don't invest in Bitcoin? And I said, no, because it's for people who are bad at math. Because real estate is so much better, it's not even funny. And it's not even speculation. When we get back from the break, I'm going to share with you the numbers if you had bought this property for $20,000 less. It's Jason Bible, Right Path Real Estate.
Mic's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website.
Hey, thanks, Dean. I was going to shoot you an email, but since you're on here, thanks for being a part of the group. You're a huge value, especially for the for keeping us on task and getting everybody goal focused. It's great. I appreciate you coming down to the Sugarland event. It's great. It's great having you there.
They know what you need and when you need it. It's there for you. Call Houston's leading real
That little Sugarland group, I'm pretty impressed. There's some real movers and shakers in there. Even the new investors are killing it.
That's 281-569-4353 or online at benchmarkbroker.com.
Are you looking for an investor-friendly general contractor for your investment property?
Marker?
Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself.
Ja,
No more
if I'm
doing the work
pronouncing that
yourself.
right, I'll answer your
Fast
question
Track
here when we get back on the
Remodeling
radio.
really does manage it all.
So give us a call today at 832-742-9992.
All right, 1 minute.
Okay.
Oh, I mean 90 seconds.
Oh, I was already counting down.
Sorry.
Hey, as soon as Taylor sends me this logo, I'll shoot it over to you.
Okay.
She's in California, so she's probably still in bed. You know those kids, those little 20-somethings? Can't get out of bed before noon.
info@jetlending.com. Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825 or you can reach us online at foundationcheck.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at andersonadvisors.com and don't forget to tell us you heard about us at Right Path Real Estate.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Got a question here on ye old Facebook. Did you run any initial numbers before putting it under contract? Yes, and all of them. There are no I mean, here's what'll happen. Let me tell you what happens in theory, and then let me tell you what happens in the real world. The answer is yes, we know the numbers before we put something under contract. Here's what happens in the real world. We look at a deal, and we train our real estate investors to do this, where you can look at a deal, you can walk a house, you can look at pictures, and get a pretty good idea of what the rehab's going to cost. We teach this in our weekend retreat, and for those people who actually sign up for our club or our membership that goes beyond our club membership, we do a monthly bus tour to our properties. Sometimes we use our students' properties, but most of the time we use our properties. And every month, we train everybody in our group how to estimate a rehab. So you get real good at this. I can estimate a rehab within a couple of dollars a square foot just based off of pictures. And this is what we train people to do. That's usually the hardest thing to do when making an offer if you're not there. So I already know what the house rents for. I got a pretty good idea within a ballpark number, plus or minus. Here's the deal. A lot of people want to, when they get an email, they want to, I got to know the exact number. When you're making a buy, no buy decision, you need to be within about 10 or 15%. It shouldn't make a big difference if the house rents for $11.50 a month or $12.50. If it's not a deal at $11.50, it's not a deal at $12.50. An extra $100 isn't going to help. If it's not a deal at $80,000, it's not going to be a deal at $70,000. So if you're within about 10 or 20% on your numbers, That's close enough for you to make a buy, no buy decision, put it under contract. Now, if you decide to use an inspector and you send your inspector out there and he comes back and says, hey man, the plumbing, the subslab plumbing and the foundation probably needs to be checked. So you call plumber out, a foundation, you call the guys over at Foundation Check, and they're looking at it and they go, oh man, here's your pier map, here's all the piers it needs. You get a foundation estimate, it's $5,000. Go back to the seller. There's nothing wrong with that. Go back to the seller. Hey man, this thing's foundation is messed up. So we've got all of our numbers in place within 10 to 20% before we contract. We contract the property, and if there's any major surprises, then we go back to the seller and go, hey guy, this thing's a mess. Now, if you walk up to the house and there's a hole in the roof, obviously it's going to need a roof. Just go ahead and put that in. So we know the numbers fairly well before we contract. Then we contract the house. Now remember, the worst thing that happens if you contract a house and you're outside of your option period is you will lose your earnest money, which could be a couple $100, it could be a couple of $1,000. But the vast majority of times we're buying a house, we've got all the numbers. We are very certain of what this thing looks like before we close. There's no surprises. No major surprises. There's not, oh my gosh, the whole house is eaten up with termites. There's no foundation problem. There's no surprise roof, replacements. I mean, it's, going into this thing. Here's why that is. When you work with RightPath and our vendors and sponsors, they're experts in their area. They're experts in this stuff. They look at thousands of houses a year. Yours is no different. In fact, it doesn't surprise me when I'm sitting there. I've got a Monday morning meeting for our Passive Investor Network, and that's all the properties our students are buying through the Passive Investor Network. And then Wednesday morning is my deals meeting with our 2 house buying companies. And it does not surprise me at all when I see the same street address. Oh, we're buying one on Main Street? Yeah, we bought 3 on that same street. It just, when you've been doing this as long as we have and as many properties as we have, you're like, man, that address sounds familiar. Oh yeah, we did one in the street, the street next to it, 5 doors down. Like, oh, in fact, what's funny is you will walk into some of these houses and you'll say, I swear I've been in this house. You walk around and I swear I've been here before. Oh, it's the same floor plan. You're in Sugar Land. It's the same floor plan as the house in Atascocita. I mean, guys, these aren't custom homes that are built all over the city of Houston. I mean, even by builder and year built, if they tell me it hasn't ever been renovated or rehabbed before, I can almost tell you what it costs to rehab it. Just by square footage and the last time it's ever gotten a rehab. I mean, it's that, when you get to that level of experience, these patterns begin to emerge. So we know the numbers before we walk into the deal. Now, if the numbers are tight, we'll put the house under contract under what's called an option. Meaning we have the option to walk away for a marginal fee, $100, $200, something like that. That's if it's a marginal deal. So we know the numbers, back to the question on Facebook, we know the numbers before we walk in to the deal. Now, I shared with you guys this deal that my wife did. Even if we paid $20,000 more, it would still be an excellent deal in our book. An excellent deal. Let me change the numbers here, and I'll share with you the internal rate of return, the IRR, is 317%. I'm sure a lot of you guys are getting 317% on your money over 5 years. No, I bet you're not. And we haven't even started talking about the tax advantages of owning real estate. That's a whole nother level of, I could add all that in there, but a 317% rate of return. But she didn't pay $100,000 for it, did she? She paid $80,000 for it. Now let's look at those numbers again. Unrealized capital gains, 385%. Remember, we're all in for 105. The house is worth 145. Cash on cash returns, 36%. 36% on cash. I put $7,500 in the deal. I'm making more than $2,000 a year net of everything. That's stellar. Absolutely stellar. Total cash flow $15,000, principal pay down $8,100. Total payoff remaining in the loan $100,000. Just like if we had done $100,000. Less money out of pocket. Now, here's where things get interesting. 6% a year appreciation. Is the appreciation I'm earning, is it on the $105,000 I have in the deal, or is it on the total value of the house of $145,000? Answer, it's on the $145,000. So I'm earning 6% appreciation on my equity and my debt. So here's where people really screw up. And it's real estate gurus that say this. I hear this term called dead equity. It doesn't make any sense at all. There's no term. You don't call. Let me back up. In the world of finance, there's no such thing as dead equity. It doesn't make any sense. Equity still earns a return. It's your rate of return on equity, if you were to use a simple term for that. It's actually called return on equity. They don't call it debt. I hear this sometimes from real estate people that tell me, oh, you got debt equity. I'm like, what is that? I've never... That doesn't even make any sense. It's called return on equity. So my equity and my debt are appreciating at 6% a year.
2 minutes.
So I'm making almost $10,000 a year on equity and debt through appreciation of 6% a year. Again, this is the median appreciation. I actually think this neighborhood's appreciating faster than that. But for the sake of this discussion, let's call it 6%. After 5 years, I will have captured $86,000 in equity. $86,000. And I put $7,500 in cash in the deal.
1 minute.
I will hear real estate investors say, well, Jason, it only cash flows like $220 a month. It's not a good deal. Really? Because I'm capturing $40,000 in equity today, and in 5 years, I'm capturing a total of $86,000 in equity. Are you kidding me? That's not a good deal. And then I'll look at them and say, you know what? You're right. It's not a good deal. When you see deals like this that you pass on, send them all to me. I'll buy every single one. When we get back from the break, I'll tell you what the total internal rate of return is. It's Jason Bible, Right Path Real Estate.
Mic's off.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs.
Hey, Nikki?
Or go to our website.
Can you remind me next week when we chat on Monday about radio show marketing?
Okay.
You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741.
Man, we got those really good popsicles in the fridge.
Right Path
Totally get
Real
one.
Estate.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started NextGen Appraisals. NextGen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
This is Business 1110.
All right, Jay, hot mics.
Okay. Welcome back. Jason Bible, Right Path Real Estate. Let's take a look here. Let's go back to this deal. Wife buys a rental property. My wife bought her first rental property this weekend, or on Monday. She paid $80,000 for it, $25,000 of work, in for $105,000. Cash flow in a couple $100 a month, about $200 a month. House is worth $145,000 today. Houston, Texas right now, houses are appreciating at 6% a year. That's the median appreciation. People ask me, Jason, where does that number come from? Real easy. Type in HAR Report, H-A-R Report. They produce a report. This is Realtors here in Houston. It's the Realtor Trade Group, if you will, in Houston. And they produce a report every single month that tells you everything that's going on in this market. Not everything, but gives you a good summary of what's happened over the last 12 months, year over year. Bought this house. We're in for $105,000, worth $145,000. 6% a year of appreciation. Got $86,000 in equity. I can't tell you how many real estate investors, and I'll run into a bunch of them Wednesday night at the Redneck Country Club event. I'll say, I don't do any deals below $350 a month in cash flow. And I'll sit there and say, all right, send all your other deals to me. For all intents and purposes, I'm paying $7,500 to buy this house. And over 5 years, it will profit me $15,000 in cash flow plus another $86,000 in equity. It will make, this is nuts. This is where people lose their minds. I'm buying one house. I'm putting $7,500 in cash. And in 5 years, I'm taking $100,000 out. And because folks are bad at math, they miss the fact that there's cash flow and appreciation.
2 minutes.
By the way, that's a 1,467% internal rate of return. 1,500%. 1,500% rate of return. I want to go back to the story I was talking about Bitcoin. When all the Bitcoin stuff was going on, and I saw all these real estate guys that were getting into Bitcoin. I'm like, why are you into... Oh, man, Bitcoin, we're going to kill it. Cryptocurrency's the next... Woo! And I sat there and thought, are you a terrible real estate investor, or are you just really bad at math? I couldn't figure it out. Because when you do the math, how do you beat a 1,500% internal rate of return? You can't. It's crazy talk.
1 minute.
It's kind of like the guys that say you need to liquidate your IRA so you can buy real estate. I'm like, you don't have to liquidate your IRA. You can do all this in your IRA. I go, well, I don't understand. It's crazy talk around here. But here's what it really comes down to. You've got to be educated. Because it's not just as easy as going out and just buying a house. You got to buy the right house. You got to have the right team in place to help you evaluate the deal. You got to have the right team in place that's around you to help you do the deal in a way that will make it profitable.
20 seconds.
You need the expertise of someone who's been doing this for years now, that's done hundreds and hundreds of deals. You need to be at one of Right Path Real Estate's events.
10 seconds.
Go to rightpathrealestate.com. You can sign up there. We've got a free workshop on Tuesday and Thursday. rightpathrealestate.com. I want to thank everybody for listening. I will be on the show Monday talking about something else, but it'll be single-family real estate. It's Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
All right, thanks.
You've been listening to Right Path Real